Zillow announced that it has stopped flipping houses and will lay off a quarter of its employees.
Oh, poor guys.
What does that mean for the Austin housing market? We're going to talk about that today.
Hey, thanks for watching. If you're into things real estate and specifically Austin, please consider giving this video a like and subscribe if you want more videos from us about the Austin real estate market, and hit that little bell too if you want to be notified whenever we release new videos.
Hey guys, I'm Alyse.
And I'm John.
And we are part of the Heart of Austin Homes team in Austin, of all places.
You betcha.
And we love sharing useful knowledge about real estate, specifically in Austin.
So let's talk about some Zillow action today.
What?
So what is going on with Zillow? I'm sure that you might have seen it in the headlines, right? But like the big news is,
yeah, that they're going to stop doing their iBuyer program, where they will purchase homes straight from the seller. And as a result of stopping that whole program, they are laying off a fourth of their employees, 25% of their employees.
I'm sure they didn't want to lay them off, but they've just suffered a bunch of losses from having to buy these homes, and then now they're selling them at a loss.
Yeah, no, definitely. Well, they've found out that their algorithmic model, their Zestimates, the model for predicting the value of a house, isn't so perfect. Like, they were using that as a major factor in what they were offering on people's homes.
Well, what I don't get is, like, in a year where you've had like 30 and 40% appreciation across the board, like, how do you lose? Like, even if you don't have an algorithm, right? If you just blindly bought a year ago, those houses are going to be worth more. So what did they do? Did they buy late?
I mean, I don't know the inner workings of Zillow's algorithm, but I would guess if you were predicting that we were going to keep up the growth of the first half of this year when things went truly bonkers, yeah, obviously we can't keep that. We cannot have 40% growth in real estate prices yearly. I mean, we can't keep that up in the long run. We said this in how many videos, right?
Well, so here's the thing. Zillow's model, their primary source of income is selling leads to agents, right? Plenty of people do that. It's fine. It's a good business model. They make plenty of money doing that. And so getting into the iBuyer program, they essentially became a brokerage too. Okay, fine. They want to go out and buy houses.
They have agents now.
Yep, go buy a house and then sell it for profit. The American way, right?
Yeah,
I mean, we do that all the time.
Well, and then they were getting into how do we cut the agent out entirely, which is funny because it's kind of shooting themselves in the foot, because that's who buys a lot of their leads. That was their basis of their income for a long time.
And I mean, if you have agents and you're kind of buying it, like we do the same thing. If we are buying an investment property, you and I, like, well, hey, we kind of get a little bit of a discount because we're our own agent. So they're effectively doing the same thing, but at scale with a lot more money.
Yeah,
right?
No, definitely. And, they would sell it to sellers as, we'll give you as much as you would get on the open market. You won't have to put up with showings. We'll just simplify the whole thing. You'll be guaranteed a price. This will be simpler, right? And
for many cases, I guess it is, because they may have overbought.
Exactly.
And some people got some really good deals.
Yeah, some people got some really good deals in that meantime. And Zillow ended up losing $420 million in 3 months, ending in September, because they bought 9,600 homes, 9,600 homes in third quarter of this year, but they were only able to sell a little over 3,000 of those.
It's like they bought at the end of the season, right?
They did.
Right? It's like, guys, if you're going to do this, like,
do you understand seasonality of real estate?
Buy in the winter, sell in the spring or the summer. Right?
Yeah, definitely. And they bought in the summer.
And now they're selling in the winter.
Yeah, exactly.
So it's like, if they could hold on till spring, maybe they could turn it around.
Yeah,
I don't know, but definitely. Or maybe they just decided, hey, there's too much risk on their balance sheet, which really I think is what's going on here.
Well, and if you think about American business approach in general, it's a very, like, we need to get to profit as soon as possible. If you're not profitable, with at most within your first year, then like your investors are fleeing for the hills, etc.
Because someone else will be.
Exactly. And so when you have that much of a loss and you're like, hey guys, if we camp on these houses for another year and I don't know, lease them out or whatever, it's not going to fly.
Well,
right?
Then Zillow would have to get into the market of leasing houses and managing property, which I'm sure they don't want to do.
Yeah, exactly. That's definitely a different business model.
And they've got to pay all the taxes and the upkeep on those things so people don't break into them and mess them up. So that costs a little bit more.
Well,
right?
and
you got property management.
I really get why you said how can you go wrong? How did they go so wrong in such an appreciating market? And it really comes back to trusting the algorithm too much, and all of those intangible things about how the market flows, or even about a particular house, whether or not traffic builds up there when the school gets out, whether or not your neighbor's throwing trash over the fence.
Yeah, and the polynomial that evaluates the probability of the home price, like
value
they're
of a
missing
home
a
price.
couple of variables.
They're missing a lot of variables, right? There's so many intangibles to a property value, right? And so, if you look at the founder of Zillow's 2 home sales that he did since Zillow has had Zestimates, right? One sold for drastically less than the Zestimate, and one sold for drastically more than the Zestimate.
Yeah.
So even in his own experience, the Zestimate was terribly off. And in this particular case, they just bought a lot of stuff way over. 2/3 are going to be sold at a loss.
I'm going to, speak like a data person here, right? And so 2 points does not make a model; it makes a line, right?
Sure, but we're at 100% of those 2 points.
Right. But now, in aggregate, they're taking losses
in their originating city of Seattle.
Something in their model broke where they felt that, hey, we should rather sell these now than try and sell them in 6 months.
Yeah.
Because they're just getting out of that business. Now, I was saying this earlier, which is by putting all those houses on their balance sheet, they're carrying around a lot of risk right, that they don't have control over, really.
Yeah.
Like their control is like, well, we think our algorithm predicts what's going to happen in the future.
Yeah.
And that's their control or illusion of control thereof, right?
Yeah.
And so when anyone looks at their balance sheet, it's like, well, man, you've got a lot of assets here that they could go up, they could go down.
Yeah.
Hedge funds do that stuff all the time, but in really liquid markets, whereas real estate is not super liquid. So
well, and as the market has stabilized, again, 2/3 of those are now looking like they're underwater. Right. If you sat on them for a year and you had what we expect in the next year to be national pricing growth, those might be in the positive, but they're just unwilling to sit on those. And it'd be really easy to say, does Zillow know something we don't? Maybe the whole market is about to crash. I've seen several people post that when they saw that Zillow was laying off 1/4 of its people and selling off all of its inventory homes.
That's a good question, but I doubt it. Here's why.
They do have some unique data.
They do. They have good search data.
Yeah,
right?
they do.
Which tells what people are dreaming about.
Yeah.
But in terms of what they actually buy, like they have the same data as everybody else. Like National Association of Realtors.
The MLS does,
Right. MLS, they've got all the data where people actually purchase. So they don't have any extra insight other than like the search data. So if they do, okay, but everyone knows that like the 2 main factors in your housing prices are, affordability, right? Supply and demand. Like, are you building enough homes? How many people are buying them? Are the jobs strong so that people can afford them? Which is also why we're seeing inflation in wages, which I think is a good thing because it catches up with inflation.
Yes.
Right. And then ultimately interest rates. Right. And those are just available for anyone to see.
Yeah.
So unless they have some special insight to the Fed, which is going to be raising interest rates, but that'll be coming in a long time. They're tapering. So they're slowly dropping the amount of bonds that they're buying, which will then bottom out to like, hey, we're not buying any more bonds. And then after that, the Fed will probably start increasing rates, but that will take a couple of years for us to get to.
Well, and speaking to those points, if you look at inventory, right, the United States needs about $1 million homes a year. Just $1 million. We just need $1 million. Needs about 1 million new homes a year to be able to keep up with, homes that are just naturally, getting older and deteriorating, or homes, growth of population and influx and such. So we need about 1 million homes a year. We've hit that, I believe, 1 year since the 2008 recession. And so we are behind. Like we would have to build an insane number of houses per year for the next few years.
Like 1.5 million.
Yeah, for the next
for
like
10
8 years,
right, to catch up.
Exactly. Right. So still a huge housing shortage period across the United States. This isn't 2008, 2009, where people have been, buying their second and third homes and can't support it, the mortgages and things like that. People just can't even get their first home right now.
Yeah, well, here's the fun stat. Like not so fun stat, really, is that in the 80s, 40% of new home builds were starter homes, considered starter homes. Today, or as in like in 2020, 4% of new homes were starter homes.
That's painful.
And like that's what we need.
Yeah.
We need more starter homes because you've got the next generation of people who need a starter home,
Well,
and they're just not there.
And what you see right now in the Austin market is that even though things have kind of slowed down for their usual seasonality in the fall, starter homes are still frequently getting bid up a whole bunch. And so anything in that 300 to 600 sort of range is frequently still getting multiple offers in the slow season right now, because we need starter homes. So that's a major factor. Fed has continued to keep interest rates at super low levels. They're buying
bonds, which is kind of like almost negative rates, but not really.
And they're promising to keep those rates low at least through the first half of the next year, and that really affects what people can buy and sell at. And so, all of the factors lead to our pricing growth isn't going anywhere. Combine it with inflation, etc. So. Yeah, no, it's not likely that Zillow is predicting that there's going to be a huge crash anytime soon. Of course, we don't know the intricacies of Zillow's
I just don't see how
operations.
It can happen, right?
Yeah.
Because the 2008 crash happened from oversupply.
Yeah.
Right? And super easy money.
If everybody decided to sell, where would they go?
Yeah, right.
They have nothing
to
buy.
We don't have oversupply. You still have to qualify for a loan. We've got actually a lot of inflation. So Americans are financially doing better than they ever have. The average net worth is way higher than it's ever been for Americans. And our average debt is actually at all-time lows.
Yeah.
So Americans are doing well financially.
Yeah.
But
and compared to a lot of other assets, houses are one of the best inflation adjusted assets. So, it is actually a good place to park your money in. Okay, you're going to disagree with me, but in your home or an investment home is a good place to park your money because it naturally grows with inflation and with the economy. And so that, is something that's factoring into this as well.
Yeah, and I just don't see where a crash would come from until the rates show up. Rates would do it. If you increase...
Rates could at least slow us down.
If you increase interest rates, then okay, that's definitely gonna put the brakes on things.
And that will be a little sad too, because people who are saving up to be able to buy a home and need to get to a certain level of savings and income to be able to afford one, that will bump up their monthly mortgage enough that it might put it out of reach for more people. So that has a little bit of a sad side to it as well. Real estate is full of ups and downs, man. It's such an emotional biz. So John, how's this gonna impact Austin?
Zillow specifically? Well, probably actually not that much, right? You said they have 9,000 homes that they bought in a quarter, right? Well, in the United States, there are about 7 million homes sold per year. So 1/4 of that is 1.75 million homes per quarter. So 9,000 out of 1.75 million, drop in the bucket, so anyone saying Zillow is running up the prices because they're buying stuff and using their own comps to get higher prices, whatever. Builders do that too, but their volume just isn't enough to move the national market.
The way I heard that went down, though, it had some intentional driving of things up in a way that felt conniving, or there were a lot of people who really responded very strongly to that. So
there is one way to do that, which would be to go into a micro market and buy up a lot of homes in a subdivision.
That's what they did.
And 9,000 spread out, not going to move it. But if Zillow says hey, we really like this neighborhood, and they just start buy, then they could price you out of a specific neighborhood by, cornering the market on one specific neighborhood.
Yeah.
But if that's the case, that's come to bite them in the butt, right?
Yeah, it has come to bite them in the butt.
So as far as the overall impact on Austin, I think it's negligible. It makes for a great headline, right?
Yeah.
But I think that they just ran an experiment that was a little too big and a little too costly, and now they're
and a little too automated.
Yeah.
Needed some more actual eyeballs on the actual house.
I'm all for business experimentation. You want to find out new data. The problem is in real estate, you really kind of need a year to see how your experiment worked. But they just they doubled down and kept buying before they really knew the results.
Yeah.
And so now, because they overspent on that experiment, it's coming back to hurt them. I'm sure that they'll live, they make a really good income off of selling leads and stuff. But it may take them a while before they're licking their wounds to recover from this. I don't think Zillow's going to go away, because if they did, someone else would come in and do the same thing.
Legit.
At least on their computer side. But maybe they'll realize maybe buying and selling property is different business.
Well, and Open Door is in a very similar position as well. A lot of the iBuyer programs are in a pretty sad position around all of this. So thank you guys so much for watching.
Yeah, really appreciate it. Hopefully you got something out of it and it was useful to you.
Definitely. And if you want to see more videos from us, please hit the little bell and the little like button and subscribe, and we would love it. Thank you guys so much.
All right, we'll see you next time.
Bye.